Hello, fellow traders. So I want to look at an earnings trade here on Meta. Of course, Meta has been extremely volatile this year, has swung all over the board from as high as $240 all the way down to a low of $86. So it's rebounded a little bit. It has earnings tonight. Today is February 1st, so it's got earnings tonight. Nobody knows what to expect on these earnings. But what I'm looking at is a likely move that's going to go somewhere between this 170-ish and, maybe down to the 125 range, somewhere around here. So again, we're looking, 170 to 125. That's a very wide range, but Meta can make those very wide moves. I mean, we can see here we went from 129 down to 98. So, it is capable of doing that. But again, looking at that general range, let's call it that 170 to 125. If we come and look at our Analyze tab here in the calendar I'm proposing, we're 129, 171. Now keep in mind, on a calendar, this is not locked in stone. This whole tent moves. It goes up and down. Unlike a butterfly, unlike an iron condor, where our blue expiration line is locked in, when you're dealing with anything that is a time spread, that becomes a totally different animal. We get into that in our deep dive course on calendars and diagonals. So right here, I'm just going to kind of show you this trade, how we put it on, and then hopefully tomorrow morning we'll see how we take it off for a nice overnight profit. But of course, we'll have to see how this all plays out. So right now, what I'm looking for is this trade is currently running around a 245 debit. As I think most of you know at this point, I really like to use a product called Option Traders Assistant, and this is my go-to platform for actually entering my orders. So I've already modeled this out, and the reason it's my go-to platform is it keeps track of the entire trade for me start to finish. I can put alerts in here. There's just so much I can do with this, and then also I can go back and pull detailed reports on every trade that I have made and slice and dice that data a bunch of different ways. So it's a great logging and tracking tool, and it also is a very good order entry tool. So again, I've mapped this out, a 147 calendar, and let's just go ahead, see about placing this order out there. Bid-ask spread is, moderately tight. And I'm just going to go out here at 245. We're going to do 3 of them. I like to keep my risk in these trades under $1,000. So my maximum risk in this one's going to be about $750 because I'm doing 3 of them. I mean, I could actually move that up to 4, but I'm just going to leave it at the 3 for right now. So let's go out at 245 and see if we can potentially get a fill. So our order is out there. Oh, I think we just got our fill. Something just binged. Oh no, that was my email coming in. So let's just take a look here. If we go to the monitor tab, there's our order right there. We're at 245 debit. It's currently trading right around 245. So I suspect that should fill shortly. I'm going to go ahead and bring this back up. And we'll just kind of pause this video a minute and see if we get a fill in the next couple minutes. Well, it's been about 3 minutes and we're still kind of bouncing all around that 245 price. So I'm going to guess we're going to have to pony up and give the market maker a penny or two. So it's up to 250 here showing. Let's do 247, see if we can get a taker there. Oh, there we go. Okay, so we just got filled. And this is our position. Again, one of the reasons I like doing this is that it captures an image like this at the time that it enters the trade so that we can go back and review it at a later time. That's always a nice function. Now, I'm also going to go ahead right now and I'm going to put an order out there to thin this trade. I could put an order to completely close it as well. And I'd like to do this right as I enter the trade. That way, this order's already going to be setting out there tomorrow morning when the market opens. And if the market opens in the way we want it to, where maybe Meta's going to open somewhere in this, 146 to maybe 155 range, this theta is going to drop out of there very rapidly, and we could capture a nice profit in a very short order. And just on the off chance that I'm not at my desk first thing tomorrow morning, or I'm working on something else or whatever, I want to go ahead and have an order out there, at least to take a portion of this trade off. So we got into this trade for our 247. Let's see, where did here we go, our modify adjust. And let's just go ahead and look at that order. So again, we got into that for 247. I like to work on like a 50% profit on these. It's nice if you can get it. You don't always get it, especially not right out of the gate. But if that were to be the case, that'd be $1.25 higher than we're at here. So let's just call this 250, which means we'd go out at 375. So I'm going to say if, first thing in the morning, if somebody's willing to pay $375 for this calendar spread, I would be happy to take their money and run. So, and we're just going to do this on one of them. That's kind of you've heard me use the term before, canary in a coal mine. That kind of sends up a flare to me in the morning if that order fills that, we hit what we wanted to hit on this. Should we take the rest of the trade off? Or do we want to do something different with that, maybe set a higher price for the balance of the trade? So now we'll just have to see how this plays out here with the earnings tonight and where it opens tomorrow morning. But let me go ahead and get that order placed out there. And so that order is now out there, and we'll see what happens tomorrow morning. All right, so let's walk through the management of our Meta earnings calendar. So this thing is a problem. No two ways about it. Let me unlock this here so it's shown in the right location here. So if we take a look at our chart on Meta gapped up hugely, okay? And it looks like it might even break out and run a little bit further today. So based on that, what does our Analyze tab look like? Well, we're all the way out here. So we're down $500 in this trade because of that huge up move. So in that scenario, when we take a look at that, you will see that the 147 short put that we had sold was essentially worthless, okay? We sold that for, I want to say it was around $8, somewhere in that range. So we can buy that back for pennies, which is what I did here. So when we buy that back, we end up in a position like this. So we have our original trade here, which we put on yesterday, and that we paid $2.47 for that. We bought this back for 2 cents. Now what's happened in the process here is this particular value of our long put that we paid decent money for has dropped considerably as well. And that's what's really bringing this loss into play here. However, we can't lose a lot more in this position. If we go out and let's just project this out to that March 10th expiration on this. So let's just go like that. So this is what our P&L diagram looks like. So we're really at max loss on that position. So we can just let that set there. We don't have any more risk if the market continues going up. However, what we can do, if the market in Meta does pull back or it does start to stabilize at some point, we can come toss in a put on that. Now, this particular put I'm looking at here, I'm looking at going out, maybe only 2 weeks on this right now. So if we put that out there, let's see, I've got to roll back now to February 17th. Otherwise, we're not going to see the value of what that put brings into play here. So let's do this. then we'll see that the combination of our trades, if we sell, for example, that 175 put for $255, we sell 3 of them, that's going to bring in $750. Right now, we're down in this trade about $500, so that would get us to a potential slight amount of profit after, of course, we factored in our commissions, etc. So that's kind of what I'm looking to do with this. I'm looking to see where Meta settles today, tomorrow. At some point in the next day or two, I will come and sell a put against that. I haven't decided exactly what put I'm going to sell yet. Now, I could also even turn this into a vertical, so I could go all the way out to the expiration of this long strike, March 10th, for example. And let's just see what that looks like. So if I went out to March 10th, I'd have something that looks like this. And then if that were to decay, I could end up, with $500 in profit on that. So that's a possibility as well. Again, right now I just kind of want to see where Meta might settle out today, tomorrow, and then I'll decide how to proceed on this. But those are some of the possibilities that I'm going to consider. The takeaway for today is that when you're in a situation like this, you can't squeak any more profit out of this short. And when we opened this yesterday, our short February 3rd, 147, it is at max profit. So just get it off there, and then we'll figure out how to deal with it from there. So the last situation you want to be in is when you have max profit on that side of the trade, and then you get some sort of a pullback that all of a sudden will take some of that profit away. So that's the big takeaway here for this morning, and then we'll figure out how we might manage this going forward. Okay, so let's take a look at our Meta trade from last week. This was an earnings calendar. We had done it just before earnings, and then this thing gapped up significantly, and it did put some significant pressure on this position. And there's a couple prior videos where we walked through kind of how we were managing this. Now, one of the things that I did end up coming in and doing, if we come and we look at our Analyze tab, this is what our position looked like after we closed out our front period short leg on this position. And we closed that out at a full profit. But of course, our long put suffered considerably because it dropped in value. So the way I ended up adjusting this was a couple days later when Meta started to have a little bit of a sell-off. It started to come down here like this. I went and I sold another put against that. By doing so, we ended up with a pattern that looked essentially like this. And at that point, then we were just waiting for some more decay to happen. So as we all know, in Thinkorswim does not do a good job of adding in, well, it doesn't do any job, and no platform does. So this is not the fault of Thinkorswim, let me be clear on that. But platforms just aren't designed to factor in all the prior trades that take place in a campaign. So that's why this is my go-to tool here, Option Trader's Assistant. And this puts together all of the trades that have made up this trade to date. And then you can see that we currently now are finally profitable in this trade to the tune of about $123. And again, that is factoring in our short strike that we already closed some time back. So now what I really want to do, I've got an order out there waiting to close this position, and I'm ready to close it. I'm just going to go ahead and see about fully closing this position now. I was looking to get around, let's see, I think I had 75 cents out there on this. But, I'm willing to pay a little bit more for that right now. I just want to close that at the end of the day. I've worked what had been a sizable loser into a decent profit. So I don't want to now carry this overnight and run the risk of something wonky happening. It's just like, let's just take it and move on. So I'm going to go ahead and let's see, we're trading at 86 cents now. I do want to get a fill on this, so I'll probably just go out about the market and see if we can't just close this thing. So the order is out there right now, and I think we just got filled. So let me just give this a minute. And then we'll take a look at the analysis. There we go. Took about 30 seconds. We got our fill. So let's just take a look at this now that it is done. And so that was our trade. We did at one point have as much as $740 in capital in this trade. We ended up with a net profit right around $100 after commissions. So that's a 13% gain, and that's pretty good on a trade that had been down significantly. And again, if we just walking through this trade, this is kind of an important exercise to see here. So this is what we originally proposed, the way I had wanted to get into this trade. This was our actual entry. Then after earnings, this thing just killed us. I mean, we were down, $500-600 in it. But we took off the short strike at that point, and we ended up in a position like this. So from here, we were looking to end up with a loss of about $750 if we did not find a way to adjust this. So ultimately, what we did here was, as we started to get a little bit of sell-off and those puts became more valuable, people were willing to pay up for them, we went out and I sold a put against the existing long position. So we're still in a calendar sort of position here, but by selling that particular put and then waiting for some decay to creep in over a period of a few days, we were down $439 then, and then here today we were able to close that out for $103 profit. So that's how this position ultimately played out, and that keeps a really good string of earnings trades intact here. In fact, let me go pull up that report real quick. So this is our string of earnings trades. We've had 20 winners, 3 losers, and these are the stats on all of them. Here's our Meta one that we just now closed. And if we take a look at the equity curve here, I should also say that this one isn't quite accurate because I had to take some assignment on that one and I had to adjust it a little bit. It's actually a little less than of a loss than that, but it was still a loss. But if we look at the equity curve, so these are, that's the equity curve of the earnings trades that have been made over about the past 7 to 8 weeks. So these are working out quite well. And I look forward to sharing more details about them as we get into next earnings season.